Hey fam, recently I had the privilege of conversing with a key figure in a billion-dollar asset under management firm. Our discussion delved into the intricacies of financial management, investment strategies, and the factors contributing to their remarkable success. This dialogue provided valuable insights into the challenges faced, notable achievements, and the innovative approaches that have positioned their firm as a leader in the competitive AUM landscape. Join me as we explore the perspectives and expertise of this seasoned professional, offering a glimpse into the strategic considerations driving success in the global financial arena. Note, this episode was recorded a year ago, but I believe it is worth the listen again. So let's welcome Pete Benson.
Born in eastern Canada on Grand Manan Island that sits off the coast of New Brunswick and Nova Scotia, which are provinces there. Grew up there, son of a commercial lobster fisherman, grew up in a Christian home, had a great family, great background. Married my high school sweetheart, Ginny, who actually grew up 7 houses away from me. So we've known each other forever, essentially, and went to school at Kingswood University in Canada, then Eastern Nazarene College in Boston, and from there moved south here in 1989, and shortly thereafter got into the financial planning and wealth management business, and have done that for 25 to 30 years.
Sweet, that's a nice journey. Why don't you go ahead and talk a little bit about your firm, your company?
Yeah, so Beacon Capital Management is the name of my company. I actually worked for 3 to 4 years in the late 90s for another firm here in the Brentwood, Tennessee area, and it was called Estate and Financial Services. So that was a good training and beginning for me, but I came from a family of entrepreneurs, and my dad was, my grandfather, my uncles, almost everybody owned their own business. And so in the back of my mind was that if I learned this business well enough, I would love the chance to start my own business. So in the year 2000, I took that step. My wife had a really good job. She was climbing the business ladder, had an executive position with Bell South, making good money, and so we could more than meet the family budget with her money. So I took the risk to start my own business, really with no seed money, never borrowed any money, never had anyone give me 20 or 50 or $100,000 to start the business. I just carved it out one client at a time, essentially working out of the trunk of my car, and eventually rented our first little office, which was just one office, maybe 12 by 14, and then started building from there. So that's how it started, and we're really blessed today. God has just done 100 times more than I asked or imagined. I love this business. It's a helping business. So I got into the business just to help people. Never really did it to build a great business or make tons of money or anything like that. Just I love helping people, and this was an area that I loved, and I thought I could help. And as it is today, we have 4 locations in middle Nashville, Tennessee area, 32 or 33 staff members, maybe 10 financial advisors, and we manage about $1 billion of of clients' money that's been entrusted to us, and we take that very, very seriously. That's a big responsibility.
For sure. But you mentioned that you started from a truck. I am curious, like, did you had any proven data to show your first client that, hey, I can manage your money?
No, that's an excellent question. I didn't, and in the first really 3 to 4 years, this is a people business, and they were buying into me, and thankfully God gave me some skills, and I just seek to live a life of integrity and high character, and work hard for people, and it was just my word that, hey, I've got your back. I'm gonna work hard for you. I really feel like I have a good plan. But look around you. I don't have a fancy office, all kinds of people, all kinds of technology. If you say yes and want me to help you with your finances, essentially it's me. And it's amazing. That's we think sometimes that all the shiny things and big offices and fancy stuff is what's going to appeal to people, but what they want is they want somebody that is real, somebody they can believe in, someone that they share values, that they can look them in the eye and just tell that, they mean what they say, and I'm going to give them a chance. And that's, in the early years, that's all we had. And really, even today, that's the main thing we have, because if our word isn't good, we don't do what we say we're going to do, and we don't prove to be honest and people of integrity, then fancy buildings and great technology and all this kind of stuff is totally meaningless. And in this type of business, there tends to get, unfortunately, some scallywags, I call them, that goats in sheep's clothing, that maybe they meant well at one time, but they go astray, and all of a sudden, they become a Bernie Madoff, and take people's money and whatever. So I think more than anything, more than the outer layer of kind of signs of success, what they want to know is that you're going to do what you say you're going to do. And that's, I take that all the way back to my youth, and my grandfather, my uncles, my dad. I mean, those were things that they just burned into my brain, that when you shake somebody's hand, you look them in the eye, you tell them you're going to do something, you do exactly that, and you prove to them that you can be trusted, and one person at a time, and then they share with somebody else, and that's really how our business is built.
So were your first few years positive?
They were. I told my wife, though, when I got enough courage to ask her back when I started the business, that I was like, okay, you're making more money than me to begin with, but I'm starting to make a little bit with this other company. At least I'm making some money. I said, but how about if I was a kept man for a couple of years? How would you feel about that? Because I really have this dream to start my company. It's a big risk, I know, but we can make ends meet with your money. But I may not bring in a whole lot of money in the first year or two. And so essentially, I would say the first couple of years, I did actually make a positive contribution to the family, because I wouldn't spend more than, only a very little bit of money. I tried to do it on a shoestring budget, and and not have any unnecessary expenses in order to help people. I had a car, I had files, I had paper maps, I would drive to people's home until I had an office that they could actually come to. And there's people that really appreciated that. And I didn't have an office to show them. I told them, if you're wondering what Beacon is, you're looking at him. And so we probably didn't make a whole lot of money, maybe $10,000 or $15,000 a year for the first couple of years, but at least I didn't go in the hole and I didn't have a big debt. I've never borrowed money except eventually, in the first office was in 2006. I bought my first office. That's been paid off, but I did go into debt for that real estate and paid it off early and quickly, but I've never borrowed money to with equipment or to hire people or for marketing or any of those things. It's just like pay as you go, and it may be slow, but at least I'm not going behind. But yes, I did make a little bit of a profit in those first 2 or 3 years, enough to know that, I think I can do this.
So what was your first year when you started? Like, what year was that?
The year 2000, when I started on my own.
So, 2000 was like the crash of the dot-com bubble. And you still ended up being positive. That's very inspiring to me.
Yeah, and just to kind of let you know, at the time, and I didn't know that was going to happen. 2001 and really part of 02 was horrible. Tech stock bust. Here's why it was good for me. I hadn't already been managing people's money, and what a big downturn in the market does is it shocks people into reality, and it helps them to really understand that where they thought they had this most perfect position and financial situation, it was at risk. And during volatile, tough, down years in the market, it actually tends to be, if you're a growing company, some of your best years for taking on new clients. Because think of it this way: if everything's going up for 1 or 2 or 3 or 4 or 5 years in a row and everybody's making money, they may not have the best investments actually in their portfolio that they should have, but the market is making it look better than it is because it just keeps going up. So they're like, well, what I got to worry about, everything's just, I keep making money. And then all of a sudden when the market goes down, they realize that, good investing is not just how much you make in the good years, it's how much you don't lose in the bad years. And how are you going to structure things so that if the market goes down, you don't get gutted? You may lose, but everybody doesn't lose equally, depending on how their money is managed, how broadly it's diversified, and that kind of thing. So actually, that made more people kind of take a look around to see if somebody else had any other answers. So you can see that actually worked in some ways to my advantage, because more people consider talking to another advisor as a second opinion when things aren't going perfectly well for them.
Yeah, no, it makes sense. But were you never concerned, because that was the time, 99 was the time when everything was going up. Were you not like, why I'm managing other people's money when I can just go in that mom and pop shops and make money for myself?
You mean, okay, rephrase that if you can.
Yeah, what I mean is 99, everything was going up.
Yes.
And trading was becoming easier for people to do, and everybody was rushing to these small bucket shops. Were you never concerned that why I'm making money or managing other people's money when I can make money for myself?
Yeah, I never really, it wasn't appealing to me to just be a day trader or to try to manage my own money to make a whole lot of money. I really had a desire to help other people. And So, sometimes it's kind of like the shoemaker's children have no shoes. You're helping everybody else. And one of the things I have to keep reminding myself of is to make sure I keep up with my own investments and financial situation, which I have, but there's been periods where you just get so busy helping everybody else that your stuff gets kind of shoved to the side. But this kind of business, if you really are going to excel in it, you have to love people, and I do. You got to care for people. My master's degree is actually in counseling, and I think I'm drawn to just counsel people about their money. And I tell all my advisors now that, good education, CFP, financial education is great. But this business is like 20% managing people's money and 80% managing their emotions, especially in a year like this. You got to hold their hand and make sure they don't jump off the cliff, and make sure they don't do something they're going to later regret. So a lot of it is managing their emotions, and I kind of enjoy that. It can take its toll, but that's really what I like about the business is I get to give people answers to give them peace of mind and direction.
So, what were the early challenges you had to go through?
Yeah, well, I mean, partly what you mentioned, it certainly did become an issue when I had really no seed money or investors to kind of help me start the business. I'd never started a financial business before. So in hindsight, I wish that maybe before I jumped into it that I would have taken some more classes on business management, marketing, those kind of things. I had done some study and research and had a pretty good background, but what I realized is that there was a lot I still didn't know. So that was one thing. And then about 3 years in is when I met John Maxon, who has been my business partner ever since. And the other thing I realized is that doing it by yourself, it's lonely. And it's a lot easier if you even just have one other person or 2 or 3 people that you're doing it with, because when I'm having a bad day, he can pick me up, and, in those early days, and then vice versa. There were a lot of opportunities to go to conferences to learn, and in hindsight, I wished I had have said yes to more of those than I did. It's kind of like the guy chopping down the trees. He hasn't got time to sharpen his axe, so he just keeps hitting it harder. And I know that in those early years, I was just hitting it harder and not smarter. And so I've always been a student, but there were times that I worked so long and hard to try to make it work that I think I could have escaped some of the mistakes and problems, valleys, if I had have taken some time to just learn what I needed to know, because I didn't know what I didn't know. And what I know now is that marketing drives everything. It really does. Like, now I would tell people we're a marketing business that just happens to market financial solutions. Almost every business is a marketing position or company, because it really does. It drives everything. There's so many people in my business that are very smart, and they're very honest, and they have good answers. They have good solutions. Like, if you put a client in front of them, they're going to do an awesome job. But they're sitting in their office looking at an empty chair, starving to death because they don't know how to attract clients to their business. And I think when ours turned a corner in a big way was after we were in business 5 or 6 or 7 years, maybe in 2006 or 7. We really got exposed to some companies and people that could really come alongside us and help us learn how to attract people, what methods were out there to bring people in so that we had a steady stream of people to see. Because the more people you see, the more opportunity, if you have a good answer, the more you get to help. You only have a few people to see, you're only going to help a few people. And we learned that was the key. And we got really good at it. And now we have a marketing team, 3 or 4 people plus 2 or 3 of the rest of us. So we've really learned how to market, and that has turned our company, the growth curve has just gone crazy.
It's very nice for you to say and be honest about the fact that every business is marketing, but because not every person or every CEO mentions that my company is a marketing company. So that's really nice of you. But you went into, you started back in 2006. Years later, when you were getting more clients, you ran your head into 2007 and 8 crash. How was that for you?
I know. Every time we get momentum, the stock market has to crash. I'll tell you, that was even way worse than 2001 and 02. I don't even think a lot of people know how bad it got there. I mean, when you've got major companies, AIG, Lehman Brothers, Bear Stearns, some of these major companies going out of business, and then our country's debt literally got put down, downgraded. That was huge. I mean, we were on the brink at one time that I really wasn't sure we were going to make it through. By then, we actually did have a pretty good cadre of clients. So I must say that I think the lesson learned there. Again, we still grew good in that year with new clients added, but what I learned during that experience, and all these negatives teach you some of the most important things in life, and that is that it's not just about making new clients. The key is also there's a balance taking on new clients, but how well are you communicating with and taking care of your existing clients? And sometimes, not just our business, but other businesses, you can kind of take for granted and some of your clients. And so we had to spend a lot of time in 2008 and 9 hand-holding, communicating with, emailing, phone calls, more phone calls, sending out videos, having clients come in on a regular basis, either in groups or one-on-one, to kind of, help them to understand that as bad as this is, we're here fighting alongside of you. The worst thing you can do is hide under your desk and ignore phone calls when people feel like, the world is burning up around them. So we learned some valuable lessons there, and that's just, people have lots of choices in who to select to be their financial advisor, and they want someone in the worst of times to be there for them. They want to hear their voice. They want to be reassured. They want to know that they matter to you. So that was a time of, we definitely earned our keep because we were burning the oil morning and night, trying to keep up with all the new clients that were seeking shelter and looking for different answers. So that was good for us. At the same time, making sure that we don't bring in two people in the front door and three go out the back door because we didn't take good care of our existing clients. So I think some of our most valuable lessons were learned during that time, that it's a lot less expensive. It's a lot less cost to a business in keeping an existing client than it is bringing on a new client. So we've added a lot of resources and different things that we do over the last 10 years or so to make sure that our clients feel valued and that they're constantly communicated with, and that they get that Ritz-Carlton Platinum service that they deserve. So, yeah, you always learn some of your most valuable lessons when it's trial by fire.
Wow. But was that like, did you had risk management from the scratch?
In what way are you talking about risk management?
Like, like when you started and you had first few years as positive, but then you ran into 2007 where you really can't control anything. Did you have risk management in place back then?
Yeah, we actually we kind of set ourselves up as a company. You've got to determine what your identity is going to be and who you're going to be for clients. So thankfully, we decided that, hey, you can't be all things to all people. So what we're going to do is we're going to be more conservative than what a lot of people are. For one thing, many of our clients are 55 plus years old, so they've already accumulated wealth. Now they want to keep it. So we don't just want to make lots of money in the good years. We want to make sure that we have good mitigation strategies so that we're positioned well, so that when a bad year comes and we don't know when it's going to come, we're better positioned than most other people. We want to do well in the good years, but we also want to shine in the bad years. So thankfully, in 2006 and 7, we were actually telling people, we didn't know 2008 was going to be as bad as it got until March of 2009 when it kind of hit bottom. But we just always know that eventually, there's going to be a correction. So we said, hey, here's how we help people with their money. But there are people in a good year that are going to invest your money, and chances are they're going to make more. Like, they might make 20%. We might make only 13 or 14. But when the market goes down 20 and you only lose 7 or 8 and they're losing 20, when it really shakes up, you come out about the same, but your roller coaster isn't near as dramatic as theirs is. And I said, if you're happy to make good returns in the good years so that you're more protected in the down years, that's what Beacon wants to be. And that's been our message ever since. You have to determine as a company, like, who's going to be your avatar client and who are you really going to go after and what is your marketing message going to be. And by doing that, the more narrower you become, not everyone's going to become your client, but that's okay. You end up with the people that buy into your philosophy. And we just kind of always been known as the ones that, we have a really good plan. We're very comprehensive, but we're not trying to beat everybody else in the good years. And so that's really helped us, and it's helping us again this year too, when things have not gone so well in the stock market.
Yeah. No, to me, it sounds similar to the fact that as I play lawn tennis, our coach will always say that it doesn't matter how good you play. What matters is when the times get tougher, how well you handle yourself.
Right.
So
Yeah, I love that.
so talking about, like wealth management, investing, what will be the investment products like you get indulged in?
What are some of the financial products we use?
Yes.
Yeah, so so we have first off, let me tell you that as our company has grown, we are really a full service comprehensive wealth management firm. We don't just invest people's money. It's really expanded since then. So we have like what we call the 5 pillars. An investment arm, which is investment plan. I'll come back to that. Income is another pillar. So we have an income plan. So people need an income plan for retirement when they don't have their income from their work anymore. And then tax planning, healthcare planning, and estate planning. So in our office, we have specialists that work with our clients in all of those 5 key areas: investments, income, taxes, healthcare, and estate. If you've got a good solid plan for all 5 of those things, you're ahead of seriously 95% of the people out there. But going back to investments, the good thing about being independent is we can have access to anything and everything. So in the growth arena, stocks, mutual funds, ETFs, bonds, bond funds, dividend products, bank notes, real estate, private placements if we wanted to. There's really, you would think that with a bigger company, like a name brand, Merrill Lynch, Morgan Stanley, Raymond James, that they would actually have more investments available to their advisors. But typically they have less. They sell a lot of a narrow amount of things. They don't want to sell a lot of all kinds of things. So we actually have access to more than they do. We also, if it's ever appropriate, we have fixed indexed annuities, or a fixed annuity, which is a lot like a CD at a bank. Those kind of things. So essentially all products, but we tell people you need 3 buckets of money. When you're really young, let's say in your 20s and 30s, you essentially need 1 bucket of money. It's all growth because it's way down the road money. But for most of our clients, we need 3 categories of money. Conservative and protection is one. Growth and income is the other. And growth only is the third. So you kind of have 3 different buckets. One is the most conservative, and that's really about protecting your money, getting a reasonable rate of return. But in a bad year like this, you're happy to have that money because it's not losing anything or hardly anything. Then you have in the middle, a bucket of money that is more dividend and income focused. So it may only grow 2 or 3%, but it may pay a 5 or 6% dividend. So when you add those 2 things together, that's good. And when the market goes down, and let's say it loses 3%, but you're getting a 6% dividend, you're actually positive 3% even in a down market. Then you have your longer term growth money. And we mostly at our firm use a lot of ETFs, exchange traded fund, which is broader diversification than a stock, but less cost and less diversified than a mutual fund. And that's what we tend to use with a lot of our clients.
Makes sense. But other than ETFs, are you also like involved in growth stock investing separate to that?
Oh yeah. So, we most of our clients have some individual stocks, growth stocks. I mean, whether it's the NASDAQ technology, Apple, Amazon, those kind of things, Google, they've done well for the last few years. This year, they're taking a hit. Everything that goes up more than what the market is. Eventually, when there's a correction, it's going to correct more than the market corrects. The good news is, for people that were in, let's say, a retirement account where there's no taxable situation to sell something inside as long as it stays in it, we've been in NASDAQ technology quite strong for the last few years, and really we excelled. But then this year in February, after a couple of months, we saw that was taking a hit. We reduced our exposure to that and went in more to value, which has really helped our clients because they've escaped. The Dow Jones is only down about 10%. The S&P 500 at the time of this recording is down 18 to 19, so almost 20. So Dow's down 10, S&P's down 20, NASDAQ's down about 30. So if you had the ability to kind of lessen the exposure to NASDAQ early in the year, you got to keep a lot of the gains you got the last few years and have lost less this year. So, we don't do everything right, but as a finance committee for our firm, we decided to do that in February, and it sure has paid off. But yeah, we use individual stocks, and there's certainly a place for that almost with any age, essentially.
So, will you say you're more deviated towards fundamental analysis or technical analysis, or both?
Yeah, there's certainly a place for both, and we use some outside agencies as well as our own internal to kind of do analysis for us, and we want to get that analysis unbiased, kind of from various sources. So again, nobody gets it right all the time, but we don't think that one particular way is just the only way all the time. So we pay money to certain groups to do certain analysis in a different way on a yearly basis, and then we just, at some point you just got to go with your gut. You certainly read what those things are saying, but at some point you have to kind of make a decision. Sometimes you're right, sometimes you're not. Performance absolutely matters in this business, because if you always have poor performance, nobody's going to stay with you all the time. But another thing that we preach at our firm is sometimes people get too caught up in just performance. Performance isn't just what gets you to the finish line. A plan is what gets you to the finish line. A coach can have the best players in the world on the field, but that doesn't mean they're going to win. It's how that coach utilizes those teammates and players and the scheme and the plan of what they do with those is what is going to help that team to win. And we look at it the same way in the financial business. Nobody that is our client has amassed the wealth that they have just by getting it right on two or three things and outperforming everybody else, and now they're just multi-millionaire. It's how their overall plan, the scheme and the strategy and the moves that were made, and not all of them was right. Any team that wins doesn't make all the right moves throughout the game. But what we find is that people have products, they have funds, and they're aiming for performance, and that'll let you down most of the time unless you really have a good plan. So we preach a lot on just the importance of your overall financial plan.
Yeah. So you gotta so Let me share something with you. I
Yep.
recently had an interview with a company executive from New York Life, the health insurance company. And
Mm-hmm.
so when I had that interview, they mentioned that, like we don't invest in stocks, bonds, and stuff because our clients is the big money people, and there's a certain level after which you can't invest in stocks, bonds. So these guys to mitigate their taxes, they invest in insurances. So our
Mm-hmm.
job is to
Yep.
save them money. And like he just totally blasted that on my face. He was like, our job is to save all these people like their taxes through investing into insurance products. But I kind of didn't understood it well. Could you explain it a little bit more?
Yeah. So I don't disagree with what they're saying, because that's the difference between that, though, and what we do is we invest money and we do tax planning. So, again, it's not just the performance on the investments. The reason we have those five pillars, we have a whole tax division arm of people that are, their whole mission is how can I make this client's situation more tax friendly, more tax efficient? How can I save them in taxes? It's no good if they're making all kinds of money on their investments, but they're getting crushed in taxes. So there are some companies that just do one or the other. And then there's other companies like ours that, we invest people's money, but we also have some people that are really astute at good tax planning strategies, sometimes utilizing life insurance and other insurance products that can be good for that, Roth conversions, other types of things that you can do with people. So it's not just how much money do I make, but how much do I get to keep? And so we want them to make the money, but we also know that taxes can really, in retirement, be somebody's biggest expense. When you're, when you think, especially if you're investing in retirement funds like a 401k, a 403b, tax deferred, when you retire and start using that money, it's fully taxable. So how can we create a situation where we reduce that tax burden for them when it's time for them to draw out that money? So that's a lot of times something we're doing with people between the ages of 60 and 70 can sometimes be the sweet spot for converting some of that money they owe all that tax on to more tax-free and tax efficient.
Yeah, makes much more sense to me now. But as an entrepreneur and you being a partner in the company, do you think goal setting is important for you?
Oh yeah. So um, that's major. You've got to have a target. So every fall, and ours is going to be Thursday and Friday this week. We have four main leaders in our firm. John and I, my son Dan, who has been with us for 14 years. He graduated from Southern Wesleyan, and he's a CFP and very good at this business. And then we have a COO, a Chief Operating Officer. The four of us go away for 2 days, and it's all organized, and we're basically setting goals for and doing planning for next year. So you set the goals, but then it's like, okay, how are we going to achieve those goals? What are all the things that need to be done? So we'll spend like 8 hours a day for 2 days straight, just hammering things out, putting big, sticky sheets of paper on the wall. And it looks like a war room when we're done. So we do that every fall, either the end of the third quarter or beginning of the fourth, and we're setting all these goals. What are some things we need to add? How can we get better? What do we need for more staff? Do we need a different office location? We look at everything from A to Z, analyze it, then goal set. And And then we're also breaking that down. So if we say, okay, next year our goal is that, we acquire $150 million of new investment money. How are we going to get that? So what's our marketing strategy going to be? And what does each individual advisor need to set for goals for that to be achievable? So we work on all that. And then every week we actually meet all year long, every single week on Friday, and also have a planning between those four people. And then throughout the year, every quarter, we have shorter day trips, or maybe 4 to 6 hours that we go, not 2 days. Like there's the major planning, goal setting, strategizing for the whole year of next year. And then every week we meet to discuss how are we doing on all those goals that we set. What do we need to do better? And then throughout the year, every quarter we meet for maybe like a half a day or 4 to 6 hours. It's kind of a bigger planning session. So planning is big. We spend 20% of our time planning, 80% of our time trying to execute that plan. And then we make sure that every single advisor has different goals, and we meet weekly to see, are they on track for those? What do we need to do? What can we help them with? What are they struggling with? How can we get them better training? How can we develop them? So yeah, huge.
So, like we are in a game where there is no limit, like sky is the limit. So what will be your definition of success look like?
Ooh, that's a loaded question. I mean, one is, this is going to sound, hopefully everybody will get it when I say it. To me, success is lasting. Okay, so anybody can be a flash in the pan. To me, success is somebody who does something well for a longer period of time. Believe it or not, in our business, for just even a small business, 90% of them fail. So the fact that Beacon has gone for over 20 years now, that's a success. We've lasted. Not to say we will forever, but we're lasting. Another thing is, keeping your character and integrity intact. We want to help people. We want to help lots of people, but not at the expense of our compromising our values, our integrity and character. So to me, success is not only doing something for a longer period of time, but doing it with integrity, because there's a lot of pitfalls and there's a lot of temptations in business. And if you especially have some measure of success, it's easy to get caught up, and especially in the financial world, there's nothing wrong with if you've earned some money the right way, honestly, and just through hard work and good business practices and everything. There's nothing wrong with, the Bible is not against, God is not against people having money, but it's not the measure of success. I'm no better than somebody who has less than me, and I'm not less than somebody who has more than me. So unfortunately in society, it's how big are the toys, how big is the house, how nice is the car, and all that kind of stuff. And I enjoy way more than what I deserve. But to me, success is how many people are we helping? And are we doing it with the right motive and with our integrity kept intact? That's what I would say, looking back on my life. If I can do that, I'm good.
Hmm. Okay. So like you are in you are in a position where you are running an advising company. So
Hmm.
what will be more important to you, a CFP or a CFA?
Yeah, so they're two totally different things. A CFA, Chief Financial Analyst, boy, I'll tell you, that's probably the hardest test and the most daunting of all in the financial business. Um, but it wouldn't be something I would even be interested in. That's you gotta you've got to be the kind of person that really likes to sit in a room and get into all the detail and market research. It typically is not a person that deals with the public and helps people directly. It's the person, which is very important, but the person behind the scenes that's really analyzing and breaking down various investments and strategies and everything that need to be done. It certainly is not my strengths, and I think I would go nuts because it's more of a person behind a computer that loves the financial business, loves numbers, loves analysis, but really isn't face to face helping individual families. So a CFP is really somebody you want to take that to be more totally well rounded and prepared to meet knee to knee, face to face with client families and design real financial planning strategies for them. So you're implementing strategies, working with flesh and blood people, and that's what turns you on. That's what gets you excited. That's what you like. And there's a place for both. We absolutely need both. You kind of have to decide, what am I wired like? Am I a people person and I just get off on sitting in a room, in a conference room, at a table, hearing people's problems, their financial worries, concerns, and figuring out how we can overcome those and put a good plan together so that they won't feel that way and they'll feel confident, and we'll give them a roadmap and hold on to their hand and walk into the future together. And there's a lot of people involvement in that type of thing. And the analyst is the person, typically working in a company that just does the prep work, if you will, for that person that's going to sit down with them, the CFP. So it's not a matter of one's better than the other. I don't think a CFA is needed for a typical just person that wants to be a face-to-face financial advisor with client families that they're working with.
But now there's another one, CMT.
What's a CMP? I don't even know.
Chartered Market Technician.
Okay. Well, you're teaching an old dog new tricks there. I don't even know that I'm aware of that, and I haven't looked into what exactly that person does.
I mean, I'm no one to tell you, but it's just more about chart technical analysis and stuff.
Yeah.
So
we pay for and rely on a lot of our analysis from other sources that we think we can trust. But here at our firm, even though we have kind of a financial team to make the overall decisions, if a portfolio is needed to be tweaked or whatever, which we have 2 or 3 times this year on some of our portfolios, either making them more conservative or more income focused or whatever like that. So we don't really have analysts within our office. You got to be a bigger firm than ours to really justify having somebody. You mostly just third party that out to other people and share resources.
Yeah. First of all, thank you for helping Southern Wesleyan in every way possible. But I want to know how it feels to have the school dedicated the business school to your name.
Well, it feels surreal. Certainly, there's things in life that come your way that in your wildest dreams you couldn't have imagined. It's very humbling. It's a big honor for them to consider that. It's also a big responsibility. It's kind of like, to whom much is given, much is required. So, I'm not being falsely humble when I say I don't feel worthy for that, but I'm thankful for the opportunity. I feel like we have something to contribute. I'm glad that they feel like they could use my name and our company as kind of an example for the business school. I'm very committed to Christian business people. I think we can make some of the most difference in the whole world in Christian circles by one of the things I'm really, if I can use the word, proud of at Beacon is that we've married those worlds of business and professionalism with being a Christian company. And we don't wave it in front of people or use it as a sales tool or beat people over the head with it. But with our staff, we pray with them. We have speakers come in to talk, give devotionals and talk on different things. We're not afraid to kind of make sure that people understand that, this isn't, we're not forcing our values on you, but this is who we are. And we have this wall in our office that's our values wall. And you can look on our website and see those values. But the first one is Christ-centered, and everything else revolves around that. So, I think there's more businesses that could follow that strategy or, kind of example that you can coexist. You can be a for-profit business, do things the right way, and not be ashamed to say, we're a Christ-centered business. We're not perfect, but we're a Christ-centered business, and this is who we are, and we're not ashamed of it.
Wow. I will. Why don't you go ahead and share with us like one of your most memorable story or an experience?
Yeah. So there's a lot, but almost 10 years ago, a couple came into my office that I was going to be meeting with, and they weren't clients yet. They were just a prospect. And I'd never met them before, and they walked in, and he had a hospital mask on, which before COVID, that was unusual. It wasn't a normal thing. And so I reached out to shake his hand, and he said, I can't shake your hand, but I can touch elbows. So he kind of touched my elbow with his elbow. He sat down and basically just jumped right into it and said, I'm here today. This is my wife, Barbara, and I'm dying. And I'm a Christian man, and I believe in miracles, but if I don't get a miracle, then within a year I'm gonna be gone. And he was dying of cancer. And so he said, I've been stalking your company, and I've researched you guys and talked to people who've done business with you and looked on your website, come to some of your events. And he said, I'm going to die, and our finances aren't exactly where they need to be. And we've got extra planning that needs to be done that I want to get done for Barbara before I die. and I need your help. And so obviously that kind of hit me square right in the nose. I was like, wow, this is a humbling, awesome responsibility that this man is entrusting me with this situation for his wife. And so anyway, we met a bunch of times throughout the next year. His health began to deteriorate, and there was quite a few things that we needed to kind of get in order, and we got them in order. And then 11 months later, I'm sitting in my office, the phone rings, it's for me, and Barbara, his wife, is on the other line. She said, hey, this is Barbara. Jim wants to tell you something. So she hands him the phone. He's at the hospital, and he said, Pete, he said, this is it. He said, I'm going to die probably within 24 hours. He said, I just wanted to hear your voice one more time and assure me. He says, I feel good about what you've done, but I want you to know that financially, Barbara's going to be in your hands, and I need to know that you're going to take good care of her. And of course, I'm trying to keep from crying, and I'm like, Jim, you can count on it. And so anyway, he died, and funeral was over, and then I started meeting with Barbara more over the next few years. It was more like counseling sessions. She was crying and trying to get over everything, and we put a lot of good planning together. And so it was really cool because about 2 weeks ago we met, and she said to me, she says, things have gone really well, haven't they? And I said, yeah, they really have. We were talking about our finances. She said, you think Jim would be proud of me? And I said, I think he'd be very proud of you. You've done a great job. You've learned a lot, because it wasn't her thing at all. And she had to learn handle everything herself. And so anyway, she's just become a favorite client to our whole office, and constantly sings the praises of Beacon and what we've done. And, I feel good that 10 years later, I feel like I've taken that mandate that he gave me, and to the best of my imperfect ability, I think we've been able to do for him what he wanted. And when I think about that, I'm like, that's exactly why we exist. That's the perfect example of why Beacon is what we are today. He wanted to make sure it was a good Christian company. They were great people of faith. They're amazing. And I'm like, hey, for 10 years now, we've done exactly what I told him we were going to do. So that's my story.
Yeah, that was very nice story, honestly. But share with us, like, what was one common mistake that you have done, like, repeatedly, and you struggle to like solve it, or find a good solution for it?
Yeah, I don't know. I think I don't know as it's been something we constantly repeat, but I think the biggest thing is you've got to be willing to fail. We've done a lot of marketing things, and some of them didn't work out the way that we thought they would. But I actually take that as a positive and a negative. We've invested in and spent money on things that ended up being a bust. But if you're going to grow as a company, you've got to take risks. And I'm not disappointed that we took the risk, just disappointed that some of them ended up throwing money away. But I think maybe sometimes we've hired people without we didn't take enough time to really get to know them, because having a good culture and having the right fit of people is everything. And I think we've learned some things in the process of how we can better our hiring practices to make sure that somebody is the right fit. But thankfully, nothing has seriously bitten us, but having the wrong people on your team and having somebody who is disruptive and a wrong cultural fit can really, it's like one bad apple can spoil the whole bunch.
Mm-hmm. Makes sense. So, what do you think about Elon Musk acquiring Twitter?
I try to stay out of those things as much as I can. It'll certainly be interesting to see. Some people immediately jumped off Twitter, but there'll be other people that probably stayed away that'll jump on now. I'll tell you one thing about Elon Musk is he's brilliant. I don't agree with everything. Our values probably aren't exactly the same and that kind of thing. But when I look at what he's done in different businesses and I mean, he is a brilliant mind. And yeah, it remains to be seen how that'll go. I actually, I think he'll do a good job with it, but there'll definitely be people that, it's same as everything. It's very divisive for whatever reason. People look at it. Everything's political today, and he has a way of making things work, and so I have to cheer him on and hope that he does a good job with Twitter. Who knows? I think all these social media things have a shelf life. Are they going to be here 10 and 20 years from now? Facebook was big and still is with a lot of people, but now it's fading and more things, kind of taking its place. I wouldn't want to own any of them because I think that they're going to be here for a while and then they're going to be fleeting and we're going to be on to something else. But more power to him. It's going to be interesting.
Yeah, Dogecoin is going up, honestly.
Yeah.
So, but what do you think about Robinhood then?
About what?
Robinhood?
Yeah, I don't know. I know what it is. I know how to use it. It's not something I've really done. I think it's good to have ways that people can invest money in small amounts and have a website for that kind of thing. Especially beginning people in finances, good, inexpensive ways that they can do online trading and that kind of thing can be really, really helpful to them. A few years ago, they talked about, robo-advisors were going to take over and people like us that actually meet people in an office face-to-face that we were going to go out of style. That may happen someday, but I don't know. When it comes to people's money, and especially older people, they like to sit down with somebody face-to-face in a real office and be able to look that guy in the eye that's going to be entrusted with $1 million or $2 million or $5 million or $300,000 of their net worth that they care about. So it's not really for older people who have amassed a lot of money and really need a good overall financial plan. But yeah, I definitely there's a place for it.
So share with us one of your favorite books.
One of the best books I ever read was The Compound Effect by Darren Hardy. He's a guy that we've learned a lot from over the years on business mastermind and business teaching. He was the editor of Success Magazine for years. Got to interview, Mark Zuckerberg, Steve Jobs, anybody that's built any kind of a company. He's been able to be front and center with them, to interview them, and has learned a lot along the way, and got 30 years of experience in that. So anyway, he wrote a book a few years ago called The Compound Effect, and it talks about every decision, every thought, every move, everything, it has a compounding effect, positively or negatively, whether it's money, relationships, business, all that. It's been a while since I read it. I need to reread it, but I've gotten all the guys in my office, all the people that are advisors to read that. You can also get it on tape or Audible or that kind of thing. That's the kind of book I like to actually highlight and underline and go back to as a textbook kind of thing. But that certainly for the business world has been very impacting to me. And again, I've gone back to it over and over, and I've always been an avid reader, so I always have books on the go. Now that I'm actually taking a less role in the business and trying to kind of sneak out the back door more and more each year, I don't read as many as I used to of that caliber. But most recently, a Christian book that I've read is The Relentless Elimination of Hurry. And it's written by John Mark Comer, Comer. It just talks about how fast the world has gotten and how technology and having an iPhone in your hand all day long attached to your hip from morning till night has changed our life, and how we're going at too fast a pace and we're missing out on a lot of the good things of life because, you know, our face is in our phone. And so it's just a really good reminder that silence and solitude, Sabbath, slowing, simplicity, those are just exact opposites of where most people are going in their life, in daily life today, and how those are the things that really matter the most, and that we're not present to enjoy things anymore because we're always looking ahead to the next thing. So that was a good slap upside the head for me that has been a great book. I highly recommend as well.
Yeah, those books I will definitely put on my reading list for sure. And I've also was that the inspiration for you to write your own book?
Reading lots of books was my own inspiration. Not necessarily those two books itself, but you know, in the financial business, having the authority factor backed up by having a written book means a lot, and we put a lot of time into that. I did, and so there's been one in particular that's the main book for our business, which is called Money Enough for Life with a question mark, and that's really the question that most of our clients ask when they come in is, you know, do I have enough money for the rest of my life? And so we talked about all the pieces that people need to have a good plan together in order to feel like they have enough money for life. That was more for business, and then one that is more for kind of Christians in general in finances is the one I did with my son, From Financial Failure to Fitness. And I like fitness. I love athletics, running, marathons, that kind of thing. I've always enjoyed sports. I like having that theme to it. And, you know, just like you can be physically fit, you can be financially fit or out of shape. And a lot of people are. So I wrote that because I've been to a lot of churches and held financial seminars on stewardship and good biblical financial principles and that kind of thing. And so the seminar that I would present to them, I kind of just built it out into a book, and that's what that book is. And it's kind of an encyclopedia, very easy to read, very short, brief, kind of straight and to the point, practical. But these are all the building blocks that it takes to be financially fit. Not getting into the gory details and analyze. It's very high level, but it kind of gives people, again, a roadmap to become financially fit. So Yeah, it's nice to have those out there that you can give out to people. I could sell them, but mostly I give them away. It wasn't to make money with them. It was just to put good financial principles into somebody's hand that they would actually read.
Yeah, no, that book was good. I've personally read it. All right, Pete. For some people who wanna, contact you or find you, where can they find you?
Yeah, well, location-wise, we're in Franklin, Tennessee, and you can look up Pete Benson. Pete Ben One is my Twitter handle. My email is PeteBen1959 at gmail.com. That's PeteBen1959 at gmail.com. Yeah, just look up Pete Benson Franklin. I'm on most of the sites, and our business website is www.beaconcm.com. CM stands for Capital Management, beaconcm.com. And thank you so much for having me on. It's been fun.